Welcome everyone to the press conference where the International Monetary Fund will present its review on the Finnish economy. I am Rickard Brander from the Bank of Finland Communications. I'm happy that you are able to participate. Thank you for coming. Today we have with us Mr. Alex Pienkowski, the head of the IMF Article 4 mission to Finland. He will in a moment present the IMF's concluding statement on the Finnish economy. Let me first mention that the concluding statement is published at the IMF's website and also at the website of the Bank of Finland. At the Bank of Finland site, you can also find summaries of the statement in English, Finnish, and Swedish. After the presentation by Mr. Pienkowski, we will turn to your questions. Those of you who are following the press conference online, please leave your question on the comment box and please write down your name and the media you represent. Mr. Pienkowski, the floor is yours.
Very much, and good morning everyone. Thank you all very much for coming today. So we've just completed our annual check-in of the Finnish economy, what we call the Article 4 consultation, and the full report should be ready and published in mid-March. You should have all seen a copy of our concluding statement, and I'm just going to say a few words to highlight some of the main conclusions from our visit. So why don't I start with the health of the economy? So Finland appears to be in a recession. There was a big dip in activity in the autumn, and then a further smaller dip at the end of last year. And a key question for us going forward is the strength of the recovery in 2024. And our central projection is that the economy is going to grow by around 0.5% this year. On one, you have higher real incomes as inflation falls, combined with hopefully better growth in Europe, and also the end of the ECB tightening cycle, and perhaps even some rate cuts. And all of these factors will support activity in Finland this year. But on the other hand, we have falling house prices and a drag from falling construction investment. And so which of these two opposing forces will win leads to a more than unusual amount of uncertainty in our forecast. But over the longer term, we see a bounce back in economic activity and then longer term growth going to around 1.5% of GDP. On the positive side, it appears that inflation has fallen back to more normal levels, which is very much welcome. And the question again for us in 2024 is how low it will go and how much of this decline will be driven by weak activity in Finland. But again, our central case scenario is that inflation will dip below 2% this year and will stay below 2% throughout the year, rising back to target around 2025. Unemployment is also expected to increase a little bit in coming months as the construction sector continues to shed jobs. But overall, we think that the labour market has been actually quite resilient given the size of the shocks hitting the Finnish economy. Okay, so that's an overview of the health of the economy. So now I think I'm going to move over to our policy discussions, and I'm going to start with fiscal policy first. So clearly, public debt has been on an upward trajectory for several years now and has reached around 75%, which is well above Finland's peer group. And so we very much support the government's ambitious objectives to tackle the deficit, and actually our recommended path of adjustment aligns quite well with the government's targets. And in particular, we think a modest adjustment is needed this year of around 0.25% of GDP, given the weak growth. But then the pace of this adjustment should increase to around 0.5% of GDP a year. And really the anchor should be to try and reach a balanced budget by around 2028, and by which point this should be able to put debt on a firm downward trajectory. So while we endorse the government's objectives, we do not yet see all of the necessary measures in place in order to hit these objectives. So there's still quite a big gap in terms of adjustment needed. Now, it's not unusual for a government to set a target and for measures to be introduced gradually over that term to hit the target. But at the moment, we actually see the deficit expanding this year, when really it should be shrinking. So in terms of measures to close this gap, what we've tried to do is think about a framework where we look for win-wins. So what I mean by win-wins is measures that both reduce the deficit, but also achieve other strategic objectives that the government has. So, for example, we very much support the plans on social welfare reform, which both reduce expenditure and reduce the deficit, but should also be able to encourage employment and growth. So that's a win-win. We also support pursuing efficiency gains in the well-being service counties. But we also think there's a role for new revenue measures. And here we see some win-wins in terms of being able to introduce carbon taxes, which again will boost revenue and reduce growth, but should help Finland achieve its commendable but ambitious climate objectives. We also think there's other potential revenue measures that the government could pursue. So these include things like indexing excise taxes, greater standardization of VAT rates, and also exploring the taxation of dividends for non-listed firms. So there are our main recommendations on fiscal policy. In terms of structural reforms, we've really focused in on labour and employment. And again, we support the government's social benefit reforms, but we also think that there's scope to try and address skills mismatches in the economy, strengthening education, in particularly tertiary education, and also better attracting and better integrating talent from abroad. The government's commitment to increase research and development spending is also very much welcome. But more consideration could be given to the type of spending that this involves and also how this could better catalyse private sector funding. So finally, let me talk about the financial sector, which appears broadly resilient in our view, but there are risks from falling house prices, still high household debt, and also large exposures in other countries other than Finland. So our policy recommendations are very much driven by the recent IMF Financial Stability Assessment Report, which was published early last year. And I encourage you to look at the details of that, but the recommendations there, which I think still hold today, would be the introduction of what we call a positive, neutral, countercyclical capital buffer, enhancing some liquidity regulation, and also the introduction of more of these borrower-based macroprudential measures. And apologies for the jargon, but I'm happy to answer any questions on the details of those. So just to sum up, there's a significant amount of uncertainty over the economic outlook, but it's definitely positive to see that inflation has fallen back to more normal levels and that the labour market has remained broadly resilient. On fiscal policy, again, we strongly endorse the government's objectives, but we think more measures are needed in order to achieve those objectives. So they're the summary of the high-level points that come from the concluding statement. Let me stop here, and if there's any questions, I'd happily try and answer them. Thank you.
Thank you very much, Mr. Pienkowski. Now we are ready to turn to your questions in the room. Please use the microphone that my colleague here will provide. And those journalists online, please use the comment box. And please remember to mention your name and media. And please note that it can take a little bit before your online question comes through, so we'll wait a minute to see if there is something online. Not at the moment. So let me just briefly mention that this material is published on the Bank of Finland website, the concluding statement, both at the Bank of Finland and at the IMF website. And at the Bank of Finland, you also have the summaries in Finnish, Swedish, and English. I see no questions online. We have the TV journalists in the room. We will take the TV questions separately. So thank you very much, Mr. Pienkowski. We conclude here. Thank you, everyone.
Thank you very much.
It really took a while for it to come true. It was Mr. Petri Sajari of Helsingin Sanomat who posted a question online, and he asks, how would you describe the importance of tax hikes?
Okay. So our main recommendation is that more measures are needed in order to be able for the government to meet its objectives. We have less strong views in terms of the mix between expenditure cuts and tax hikes. And what we do is offer a menu or ideas for both. As I mentioned, we do have a number of suggestions in terms of carbon taxes, linking indexing excises, thinking about VAT rates, and looking at the taxation of dividends for non-listed companies. And I think, from my understanding, that the government is opposed to increasing personal income tax and corporate income tax, but there is, I know, some discussion about raising other taxes. So I think this could be part of the mix, and we certainly think that could help meet those ambitious fiscal adjustment objectives.
Thank you very much. And now we don't have any further questions here, so we will conclude. Thank you very much, Mr. Pienkowski.
And if people want to get in touch via email, I think,
perfect. Thank you very much.
Definitely answer questions through there.
Thank you.
Thanks.
So.